Welcome to Spidell's Federal Tax Minute. I'm your host, Catherine Zidane, and this week we're covering making a timely estate tax portability election. If you're looking to build your trust in estate business, Spidell is offering 7 webinars to help you understand and prepare these returns. You can order all 7 webinars at a discount or pick individual courses at the regular price at spidell.com under webinars. The American Taxpayer Relief Act of 2012 made permanent the portability of a deceased spouse's unused exclusion amount for deaths after December 31, 2010. This provision allows a surviving spouse to use the unused estate tax exclusion of his or her predeceased spouse by electing to carry it forward for the surviving spouse's benefit. With the potential of reduced estate tax exclusion amounts in the future, this has become an important tool for taxpayers to preserve exclusion amounts to use at the death of the second spouse. The surviving spouse can now inherit the deceased spouse's unused exemption rather than being forced to use it or lose it. But the deceased spouse's executor needs to file a timely Form 706 upon the deceased spouse's death in order for the surviving spouse to inherit the deceased spouse's unused exemption. The question of whether it's better to use a bypass trust or take advantage of a portability election is not entirely settled, but it's still important for tax practitioners to understand the portability election. There can be expensive consequences for failing to make the election on a timely filed return because not making the election on the death of the first spouse will preclude taking advantage of the deceased spouse's unused exemption when the surviving spouse passes. Executors generally are required to file an estate tax return for a decedent within 9 months of the decedent's date of death, unless they request a 6-month extension. Estates that file an estate tax return only to make a portability election now have 5 years from the date of the decedent's death to make the election without having to pay any fee, effective July 8, 2022. Previously, estates that had no filing requirement because the value of the gross estate fell below the filing threshold could make an election within 2 years of the decedent's death. Revenue Procedure 2022-32 supersedes Revenue Procedure 2017-34, which allowed the 2-year filing period. The IRS determined that many otherwise eligible estates failed to make the election within the 2-year period and were filing private letter rulings to obtain an extension at the cost of at least $10,000 just for the IRS user fee. This put a significant burden on IRS staff as well as the estate's bank account. By extending the period to 5 years, the IRS anticipates that it will dramatically reduce the number of private letter rulings that are being submitted. Any private letter ruling requests pending as of July 8, 2022 will be closed if they haven't been already, and the user fee will be refunded. Estates should then file their estate tax return within the 5-year filing period prescribed in Revenue Procedure 2022-32. If a Form 706 is being filed only to elect portability, the Form 706 instructions state that a complete 706 has to be filed. But for portability elections, the form is designed to allow estimated values of the gross estate rather than the detailed valuations that are typically involved when filing a Form 706. Using the table of estimated values included in the 706 instructions, the executor is allowed to estimate the value of the decedent's estate using $250,000 increments. You can stay up to date on federal tax issues with a subscription to Spidell's Federal Tax Letter. To check out the benefits of this monthly publication, go to spidell.com and click Publications. That's all for this week. Join us next time for another episode of Spidell's Federal Tax Minute.